Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we've uncovered the definition of insanity. It came out in today's CPI report. We're going to talk all about it and why it really matters to you. Let's dive in.
Trade Genius.
Hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening.
So Bob, we got a report. I think the report was called CP Lies instead of CPI. We saw some pretty dumb things, and the market obviously just went bananas off of data that really isn't much to be happy about.
I'm beyond words. This is an AI derivative driven market, and they desperately needed to show a beat in this CPI print, and they manufactured one. And we'll show you the chart here in a second, but it was absolutely insane, the move today. Now, we've had, and I could be wrong, in the last 2 weeks, we've had 5 gap up and 3 flyaway gaps. Unprecedented in the market, these moves. And Phil, I think they're afraid of something. But before we get into that, let's look at these couple of these charts here. This is what they produced for us, showing us that basically they had a 2% plus print in their CPI report. We know that's just utterly ridiculous because they changed the way in which they count costs. And the next one we want to show here is, this is the one that you found, which is just absurd. When I saw this, I called my wife and I said, honey, our healthcare costs are going down by 34%. This is awesome. Start spending. And this is how they did it.
Yeah.
They said premiums have dropped 34%. It's just, they don't even care anymore. It's just like, screw you. We got to get the algos to buy. We got to get the shorts blown up, and we got to get this blow off top out of the way because the recession is coming and it's going to be brutal. In fact, Andy Constant today, who called the lift here 2 weeks ago, said it's sell every asset time. And he's not prone to drama, would you think, Phil?
No. And I think, he sees the fact that we've gone too far, too fast. We still have a ton of the long end of the bond spectrum to be issued. We had a 10-day recess from that, but that starts next week again. It's a lot of long-term bond issuance that needs to get absorbed by this market. And it's the one thing that does suck liquidity out of the market. So, I don't know if this was a function of ramp it up before the government shut down potentially on the 18th, or before the long bonds have to be issued, and that's going to suck liquidity out. But it's been one of the biggest short squeezes I've seen in such a short amount of time, and it's completely overbought here. So it's hard to make a case to get in long here. I would say if you are going to get in long, you got to wait for a pullback. And typically when we get these extremes, and even if, Bobby, look at the daily chart, we went from a -2 on the Bollinger Band to a +2 on the Bollinger Band in less than 2 weeks. That's unheard of. So you're probably going to get some sort of pullback because it's one of those things where you just, you burn up all the fuel too fast and you end up having to coast into the runway. So I think that's going to happen. Now, this print here, 34% negative, we were talking about that. I don't know anybody's health insurance cost that went down 34%. And what I think's happening is that people are getting so choked out from inflation, because remember, guys, it's only a 0.1% beat on the rate of inflation. So all it did was, we're still inflating. You're still getting creamed on inflation and just slowing by 0.1%. And you're telling me that the market thinks that's worth 80 to 100 points in the S&P 500, whatever. Like Bobby, this is a chart you brought up, right? The health insurance. I don't know anybody's health insurance bill that looks like that. Mine certainly doesn't. But what I think might be the case, Bob, is that a lot of people just stopped paying for health insurance because they couldn't afford it. And so on aggregate, it looks like your health insurance expenditure across the consumer base has dropped by that much. And I think it's just that people are getting tapped out, because if you look at core CPI, excluding food and energy, right, it's not dropping. Look, it's up quite a bit here year over year. It's going up, guys. And I think everybody can agree and everybody can feel it in their pocketbook. If you look at in terms of the inflation that we've been dealing with here, we're up 17, almost 18% in the last 3 years. This is the inflation rate everyone's dealing with. And the market's rejoicing that we slowed by 0.1%. And the problem with that is it's choking out the consumer. And we can see that even in credit card delinquencies, right? We're now at the highest levels ever since 1991. That's pretty significant jump. So I think people just simply stop paying for their medical insurance, Bob, and that's why the number looks like we have less in the way of insurance expenditures.
I don't know. It's just we call this the dash for trash. So they're scouring now anything that was highly shorted and under owned to get a lift into the end of the year. What was fascinating for me, my trading account's different than my long-term account. I'm usually in and out of indexes and volatility. I was short volatility into this trade, so I was pretty happy. But the VIX started going up right away. Tomorrow's a VIX change, but my long-term accounts are still. I have not changed my positioning at all. I'm still long energy and long commodities, long TLT, and I've been reducing everything else out of my positioning. I don't own any tech at all. And so I missed the pie a little upside there. But my portfolios are sitting near all-time highs because look what happened. Energy went up today. Gold miners went up today. Silver miners went up today. TLT got a huge move today. And even the biotech index, went up today. And I own a few speculative biotech names that are basically lotto picks for news. They went up today. So, pretty much everything went up today, except I think the shippers still were struggling a little bit, but they pay nice dividends. And depending on what shippers you own, you're going to do pretty well there, especially if they're energy names. But Phil, I just think, too far, too fast. And in fact, I'm going to go in and start, picking around here and start reducing some size here and start raising cash again. And I think we're going to probably get a subsidence here. This is a gift if you're long. And so I'm going to take advantage of it. Just like I raised cash going into the October demise, I'm going to raise cash because we're going to get a pullback. Look, Santa does not come on the evening of December 24th anymore. He's starting to show up here in the beginning of November. They're front running everything right now.
Yeah, and if you guys look to, I think you have to kind of make a call for a sell here at these levels, just like you said. I mean, this gap up is just ridiculous. And if you look to what's going to happen tomorrow is the monthly VIX contract rolls. Every one of these vertical lines, and courtesy Spot Gamma for marking this up for us, but every one of these vertical lines on the chart here is our VIX expiration. And as you guys can see, the stock market doesn't do well around those. And everything's really driven around the VIX contract, shorting volatility, right? I mean, essentially, our markets have become one big short volatility trade. And so, but you guys can see here, ours is tomorrow, right around, I think 9 a.m. is when the contract rolls. So pre-market, we're going to have that roll. And so what that tells you is you are probably going to see some profit taking and some pullback into Friday. I know it's OPEX, but a lot of times you'll see a rise in the midweek, Tuesday or Wednesday of OPEX, puts in the high for the week, and then we pull back. And I think this week probably is a pretty prime setup for that, being that we ran up so hard. And who knows, this CPI print might be just a high point pivot in this market too. That's entirely possible. So now I think what we're going to do, Bob, is we're going to pivot to the Fed. They're going to see what Jerome Powell's reaction is, because Yellen with the debt schedule and now with the CPI is effectively, given back 3-4 of their rate cuts or rate hikes, I should say. And that puts them back a couple steps back in terms of what they thought they were going to do in progress of tightening. Because I still think, because if you look at like going back to that chart of the core CPI X housing and energy, right? I mean, this is reality for the Fed. And if the Fed does not get this under control, we're going to that's why he said, if we don't deal with it now, there's going to be more pain later, because people are going to get choked out. And you're already seeing it with credit card delinquencies and things like that. I mean, we haven't even covered the auto sector in a while. That is a disaster. Banks are flooded with repoed cars and everything like that. So I think the Feds are very aware of the fact that the consumer is in a bad spot. And ultimately, that is what's going to trigger, I think, ultimately our recession. And if you don't get it under control, that turns into a deflationary spiral in and of itself. They have to keep conditions tight. I think December rate hikes back on the table, Bob. And you're not going to find very many people that would agree with that.
Yeah, I mean, look, people are missing the point here. Janet Yellen keeps fighting him on the long end, and he's going to keep squeezing the short end. And yeah, I guess the polling says now 4 rate cuts are being scheduled to the end of 2024, which is just, insane. And yeah, look, they said his credibility is on the line now, because we're going to get worst of both worlds. Here's the thing. There's a difference between inflation and prices. Okay, people don't understand that. So they could continue to drive prices you pay, could continue to rise. highs and they can show deflationary prints. Okay, people don't get that. Remember, what you have to live on is going to maintain costs versus things that you like to have are going to deflate. Just think about, when you run out of money, you run a garage sale, right? You just start dumping stuff. And I think people are going to see that, en masse going forward. And here's the other thing too. When's the last time you saw basically Christmas up in September? Home Depot had Christmas trees up next to their skeletons for Halloween. They're trying to dump this inventory, this Christmas inventory, as early and as fast as possible because there's nothing new's coming over, Phil. The tranche that should be hitting the shorts here in the beginning of October to get out onto the floors in November for Christmas isn't coming. You're going to see probably Home Depot, those big display areas in the front are probably going to be empty. They're going to be hiding it with some sort of lawn chairs or something because they're going to be wiped out of all inventory.
Yep. All right, guys. Well, that's going to do it for today's episode. Let us know what you think. Again, crazy numbers coming out and the stock market overreacted. A lot of hedges came off, I think, to exasperate the move higher. But Bob and I both think we're probably in for some cooling off. Maybe as early as tomorrow, we'll see that after the VIX expiration. Let us know your guys' thoughts on what you think the market's going to do from here. And then also let us know what you think about these inflation numbers and how are you guys feeling about inflation. I think most of us would agree that we could use a little break in inflation. And the numbers we saw today probably didn't reflect reality for most. So let us know your thoughts below. Thanks again for watching. Check out our Black Friday specials over at tradegenius.co. I'd love to see you guys in the room, navigate these crazy volatile markets. It's not going away. It's going to get crazier. So let's navigate it together. We'll see you guys next time. Bye-bye.
Trade Genius.